Well, happy Friday to you. Thank you so much for joining us. I appreciate that. I'm Marlon Bowling, your tour guide to the ag commodity trade. Well, this is Friday, so usually we're just kind of heading toward the weekend, not much to talk about. Today is a little different because we had a holiday on Monday. That means today we actually got our weekly export sales data out, and we just got it from USDA a short time ago, and wanted to walk through the numbers with you here for this past week. Now, on the corn sales, we had 949,700 tons that were sold last week. We had soybean sales at 1.78 million tons last week. Now, we knew it would be big. The trade was expecting somewhere between 1.3 and 2.5 million tons, and it was in there, right in the middle of that range. On the corn, they had a wide range of estimates on the corn, anywhere from 300,000 to 1.4 million, so it was in the middle of that too. On the wheat, 381,500 tons last week. They're again right in the middle of trade expectations. The soy meal at 440,200 tons was toward the upper end of the range of estimates. Soy oil was a net reduction of 900 tons. So it didn't really move the needle there. Now we had grain sorghum sales. They came in at 67,400 tons. Upland cotton, 91,700 running bales for both marketing years combined. And the rice, 31,500 tons this past week. And then the cherry on top, just as I was coming to the studio, we had a new overnight export sale, one of those quote unquote flash sales that we talk about. It was a sale of soybeans to China. It was 121,000 tons worth. So we'll add that to the totals, and that will show up, well, probably not even next week. That'll probably be 2 weeks out. Anyway, we'll talk with Brian Hoops about that. Brian, when will this sale show up?
Morning, Marlon. It should show up in next Thursday's report, but
okay.
You're right. It may be pushed back one day. So, yeah, we have a holiday that is affecting things this morning. We had our export sales out a little bit later than normal. So we had 4 trading days this week. 2 of those days had sales of soybeans to China. The export numbers that were out this morning were pretty decent. We had a marking year high for soybeans, over 71 million bushels. Now, take that with a caveat that, the marking season really began September 1, so we don't have a lot of data, but it was a decent number for soybeans. And the biggest buyer was China, and the second biggest was unknown destinations, which I think everybody assumes will end up being China. So they continue to narrow the gap that they had between a year ago and this year's sales. Earlier in the marketing season, it was a very wide gap, and that's narrowed considerably. We're still trailing as far as Chinese purchases, and overall sales for both corn and soybeans trail last year's pace. So we're not off to a very good start. And the USDA in their balance sheets on Tuesday will reflect that we are going to have better sales than a year ago, and we're way behind. So something's going to have to change down the road. Either our sales are really going to pick up, or USDA is going to lower those export projections and increase the balance sheet. So there's a lot of wiggle room for the USDA in upcoming reports, especially when they want to adjust corn and soybean yields on Tuesday. And trade is expecting to see those yield numbers decline in corn by a bushel and a half and just slightly in soybeans.
And it'll be especially kind of awkward timing because it'll be as the combines are really starting to roll too. So they're getting a fairly early start this year in a lot of areas. The overnight trade was really quiet, Brian. Let's take a look at where we closed up on the Globex trade here this morning. Just not much going on at all in the corn market on the big board here. We can take a look at that December new crop contract. Maybe we can't. There it is. It is a penny and a quarter higher at 487.5. So not a big move by any stretch. On the soybean trade, you had the November contract 1 3/4 higher at 1361 1/4. So that didn't have a very big move either. How about wheat in Chicago? Well, we had December, a 1/4 cent higher, hold me back. $6 even on that one. And it didn't have a real wide range either. Kansas City wheat, we had December just down 3/4 cent at 736 1/4. And in Minneapolis, spring wheat, December was down fractionally. It was down 3/4 at 774. The cotton market this morning, by the way, after selling off hard for a couple days, December was actually 75 points higher at 86.13. Now, we'll come back in a moment, and we have some beef and some pork export numbers to talk about and what the trade may do to wrap up the week here. We're talking with Brian Hoops. We'll be right back. Okay, we're talking with Brian Hoops. Now, we were talking about our weekly export sales on the grain side. Here is a look at the beef and the pork sales, and let's take a closer look, shall we, on the beef. 12,100 tons. Well, that doesn't sound like very much, and I'm looking back, and it looks like the majority of it for 2023, that was down 34% from the total that we had last week. So, yeah, last week it was over 17,000 tons. Now, on the pork side, we had 29,400 tons, but that was also down by 29% from last week, at least for the current calendar year here. So not heading in the right direction here, Brian. From the perspective of producers, there would be a little room for improvement here, wouldn't you say?
Yeah, right, Marlon. These numbers, as you said, disappointing, down from last week, but they're also below the average that we've seen over the last 3-4 weeks. Noticeably absent was Mexico and China, both out of the beef market. They were very limited buyers. Mexico is the biggest buyer of U.S. pork for this week anyway. They counted for about a third of all purchases of U.S. pork, and China was, very quiet. And I think that's why we see these numbers dipping when you look at last week or you look at the 4-week average. Is when China is in the market and aggressive buyers, we usually see some decent sales or big sales. They're noticeably absent or very limited in their purchases this week. And that's why we're seeing numbers really dip, because otherwise you're just looking at small purchases from some Asian countries and Mexico, and that's who you're relying on to be buyers. And that's just not enough to support these price levels, I don't think.
I was looking back at the rundown from yesterday's cash cattle trade across the country, and you really didn't see very much. I saw a little bit of, I guess you would say, dress basis activity in the northern plains. Looked like the only thing happening was around 290 yesterday. Well, I think that would be similar to a week ago. Didn't see anything for live basis sales. What are they doing? Drawing on contract cattle right now?
It seems like that's what they're doing. They seem to be trying to expand their kills a little bit, even with this holiday shortened kill week. But the problem with that is, the boxes are starting to weaken. They were down at midday yesterday, down last night once again. And that's really a disappointment, because they shouldn't be dropping, I don't think, that hard here. And we haven't really seen the cash markets benefit from this rally in the futures. Futures been moving higher last 2 days on some technical buying and anticipation of those futures moving higher, or the cash moving higher. We haven't seen that in the north. It's just been mostly steady, as you mentioned, 290 dress trade, and in the southern plains, really no trade yet. Heard some bids, in that 180 range, but nothing to go home with and say that they won a victory this week in the cash markets. It's been mostly just a standoff.
Yeah, live cattle yesterday wrapped up about $1 higher, as we saw on the feeders. They were up about $2.40 on the nearby contracts. And on the lean hogs, when we came across that finish line, we were higher, with October up 95 cents. December was up 82. So we'll see how they want to start out today. Thank you, Brian, for the analysis this morning. Appreciate that very much.
Have a good weekend.
Brian Hoops of Midwest Market Solutions with us. He's in Springfield, Missouri. We are not. We're in Nashville.